Welcome to Trading Lounge and the European indices for the 3rd of July, starting with the DAX on the daily chart here. This has been our count to the upside here, and we've been looking for an A wave here, and then an A and a B and a C wave here. That's nearly completed. Once it's completed, we'll be looking for a move down. Now the 61.8% is right down in this low here. I just can't see ourselves getting to that space because two things. Wave A here is this length here, and there'll be some sort of correlation in terms of equality with that wave A and wave C here. And secondly, that this is really playing out more like a wave 4 coming across here, more of a complicated correction. We have been seeing different counts in the leading stocks in the Nasdaq, and we've been also looking at counting this differently with the S&P 500 as well. So in this instance here, it would look like this as an alternative count here, with 1 and 2 here, then 1, 2, 3, 4, 5 here for 1 and 2 and 3 here, and an A and a B and a C wave here for wave 4. And it's also possible that wave 4 can be sitting in here with an A and a B and a C wave sitting right here. I'm not sure that's the case, but we need to consider it and look at the consequences and look at how we can trade this as well. So from here, we'll go into the intraday and have a look at things. So as it stands at the moment, or it has been standing with all the markets, we've been looking this down here as the A wave in 5 waves here. So after an ABC correction, which we thought we may have had it here with an A and a B and a C, and coming down here further, but we didn't break the 12,000 here, and we didn't break the 3,000 on the S&P either. So we've seen a move higher from this. I'm unsure about how to count this in here. I can count 5 waves down here in terms of 1 and 2 and 3 here, a very high 4th wave here, but doesn't overlap wave 1, and then down for wave 5. So it's also possible to have this sitting here as well, and we'll look for a count for that because it does change the dynamics a little bit, because as it stands here and the markets we've been looking at with the S&P, we've been looking for 5 waves in this sequence here, which would be 1 and 2 here, and 3 and 4 and 5 to finish at this point. But if this is sitting here, then we need to look at this as an impulse wave, which does count quite nicely as 5 waves. So a nice sharp wave 2 here, so 1 and 2 here, and then all the way up for 3 where C is here, back for 4 here, and then up for 5 here. So that can also play out as well, and we'll need to look at that as well. But for the time being, for this purpose, I'll leave that here, but we'll dive in and have a closer look here. So in this instance here, we've got on the hourly chart 1, 2, 3, 4, 5 here, and then looking at this as just complicated wave A here and wave B sitting over here. And then what I do know though is this structure here. So I know that we've got wave 1 here and 2 here, and we've got 1, 2, 3, 4, 5 here for wave 3. This is wave 4 here, and all the other indices are going through the same thing. Yes, it could pull back to the 12,500, but it doesn't have to. It could also just move straight up from that point there. But I think looking at this here, we could just put a line through here as such. And once that line here becomes the support, then and support would look a little bit like this here, if it's okay. So the market would come up to that level there based on those 2 highs here, react from that there, and then push up through there, and then come back and test, and then push off there. So that's support, that's resistance. So just, it's just refinement on moving in across a particular level there, but it's clear that we've got 1 and 2, 1, 2, 3, 4, 5 here, and wave 4 and wave 5 to move up. So taking profit on a trade anywhere from above, anywhere from 12,772. This is all of group 2 here, 65, 72 and 80 here, 800, and then we've got 13,000, which is a major level here. So taking profit between these 2 here would be the thing to do, because if we got a pullback, we're going to get a pullback anyway after 5 waves, 1, 2, 3, 4, 5 here. So we can pull back to the wave 4 of 1 lesser degree and then move up from that point. So let's just check that out on the 15-minute chart and look at the bigger count here. So this would count a little bit differently here. So if we looked at this move up here as 1 and 2 and 3 and 4 and 5, or 1 and 2 here, which counts quite nicely, I have to say, then looking at this structure here of 1 and 2 here, 1, 2, 3, 4, 5 is pretty clear to see. Wave 3 here, wave 4 is traveling sideways. Wave 4 can pull back to the wave 4 of 1 lesser degree, but 5 is a really nice support, and we're only looking for an A and a B and a C, so it could even be done and dusted here. I'm not sure, but we talked about moving across here in this space here. You can go long above this level here, but if you wanted to get a better position, you can sort of move in from that position there. So just allow that level there to become support before going in. And what I wanted to say here though is that let's just entertain me for a while, but this 1 and 2 here, if this market is 1 and 2 there, then wherever that top is there, you'll find that there. And I'll just put it at the 800, because I know 800 the bids will be hit. 8's a profit taking number, and the 38.2% retracement level for this blue wave 4 would come back here, or to the wave 4 of 1 lesser degree, which is this one here. So we'll need to see where that finishes. So it may be here at 38.2, or it may even be a little bit higher here as well in level on that low there. So we'll need to see how that finishes off there. But as it stands at the moment, there is a nice it's a nice A wave here, then an A and a B and a C for the B wave, and down for the C wave. So it can be finished unless we're going to go 1 and 2 and 3 and 4 and 5 down to here, back down to this wave 4 of 1 lesser degree. But if it doesn't pull down to this wave 4, this one doesn't pull down to this one here of wave 4 of 1 lesser degree. So that would be, let me just check that again. Let's just check this here, because this is where we're looking at the personality of the stock here. So 38.2% retracement levels here, and the wave 4 of 1 lesser degree is here. So we'll see if it pulls back to either of those levels, because if it doesn't, then we can't ask this one to do the same. So then this one will be even higher. This one here may even stay within group 2 here, and then push up from there. So I just want you to be mindful of this here, and if that's the case, then moving up into this level here. So keeping the stop under each wave 4s, moving up here would be the way to handle that. So that's that really. In a nutshell, we can have a look at the FTSE as well. The FTSE here, I'm not quite sure how to count it, but I don't think it's really the stock or the market to trade long, because even though it will go higher, it's not. It's a following stock. So you have indices. So you have leaders and you have followers. Now the leaders tend to take the range and give you the range, but also the risk is in that, because it's the first out of the gate in a way. Followers tend to follow and they don't range as much. But here we can see we've got 1 and 2 here, and then in here 1, 2, 3, 4, 1 and 2 and 3 and 4 and 5 here for the third wave here. And we're also going through the fourth wave here as well, and that should take us up the length of wave 1, and wave 5 should have some correlation. So that will take you up to 6,300, which is the top of group 1. Now in this instance here, if the market's going to go, we've got it there as 5C of B here, but if it's going to go any higher, what you'd be looking for would be the arrival, the reaction in 3 waves, and then 5 waves up here for the first high above the level, and then an A and a B and a C wave here. And so you just trade to that, get out here, and then you put your long trade back in over here. And if the market moves up, well, then you'll be taken up with it at the right time. But otherwise it could just go to here and then fail from this point here. So if you're going to short this too, you note that we had 3 waves here. So that means that you can short under here, and that would retest that and fail at that point and move down, and you can go short from that point. So that's your short, and that's your long here using the level here. Don't go short on the first one here, because you'll get 5 here and you'll get a correction. And because you get 5 here, yes, you will get another 5 here, but it may just take you to here. But if you do go short here, then you're just going to have to do a smaller position and leave the stop above this one here. And then when this one comes in, then you can bring the stop down to this one here. And then you can just, if the market moves up here, then you can just trigger your short to your long again and go long from that point. So it's just really, all we're really looking to do in terms of trading is going from one number, 100, to the next number of the same degree, 200 or 300 or 400 or 500. That's kind of what you're doing. So any move up or down from here, you'll need just to give it some time, but essentially you'll be looking to go to the 200. Or if you're here and you get support, you'll go up to the 400. So it's just going from one number to the next number of the same degree, and you're just trying to figure out if you've got support or resistance, and the Elliott wave can help with the direction most of the time. Say 60% of the time you can use Elliott, but when you get into situations like this where it can get quite complicated here, then it makes it a little bit tricky. When it's flowing, it's easy, but when it's doing this, it's tricky. And all the markets most of the indices have got this pattern here, and a lot of stocks have got this pattern. Well, it is the stocks that create the indices. Thanks for tuning in. Enjoy the weekend. Cheers.